Good morning and welcome to the Dodd & Associates Daily Tax Briefing for Wednesday the 3rd of November. Overnight we've had a judgment released from the Taxation Review Authority on a case which is quite lengthy, so bear with me as I run through the facts, as it clearly shows a problem that the taxpayer caused for herself. The case is case 2/2011, and it basically is a taxpayer who is involved in property development activities with her husband since 1995. On the 19th of July 2007, the Commissioner of Inland Revenue issued notices of proposed adjustment, or what we call NOPAs, for particular GST periods where they were attempting to adjust the GST that had been returned by the taxpayer. On the 19th of October 2007, the Commissioner of Inland Revenue advised the taxpayer, as she had not responded to these NOPAs, she was deemed to have accepted them, and they issued the appropriate assessments. Now, at the same time, the taxpayer had failed to file tax returns for the 2004 to the 2007 income tax years, and so the Commissioner issued default assessments based on what was in the GST returns. On the 30th of November 2007, the Commissioner of Inland Revenue then issued a notice of a debt against the taxpayer and made a follow-up to her on the 16th of January 2008. Now, this is where it starts to get a little bit complicated, but please keep with me as it is quite an interesting case. On the 11th of March 2008, the Commissioner issued proceedings whereby he was attempting to recover tax, penalties and interest which totalled $2.047 million. On the 14th of March, these proceedings were filed with the Manukau District Court, and they were served on the taxpayer on the 6th of June 2008. On the 7th of July 2008, the taxpayer filed a statement of defence with the District Court. Also, at the same time, on the 8th of July 2008, the taxpayer issued NOPAs against the Commissioner of Inland Revenue for the tax return assessments that he had issued earlier. Her argument was that the income was nil, but provided no evidence as to why they should be nil. The Commissioner of Inland Revenue responded by saying that the notices of proposed adjustments, otherwise known as NOPAs, were out of time and were not issued with the applicable response period, and so therefore the original default assessments issued by him stood. On the 25th of September 2008, the Commissioner of Inland Revenue filed strikeout application for the defence that the taxpayer had filed way back in July 2008. At the same time, the taxpayer was allowed to file an application with the Taxation Review Authority and filed an application for a stay of proceedings in the District Court pending the outcome of the Taxation Review Authority case. On the 27th of May 2009, the defence by the taxpayer in the District Court was struck out, and the court entered judgment for the GST and income tax assessments. By the time the judgment was sealed by the court in June 2009, the debt had risen to $2,051,000. So she was required to pay this. At this stage, the Taxation Review Authority had not yet heard the case, and the original judgment stood. Well, now the Taxation Review Authority have come out as part of hearing the case and said the taxpayer failed in her bid to get anything overturned because it was her inaction that led to all this. They also said that the Commissioner of Inland Revenue made assessment on a genuine basis, and the taxpayer delayed any attempt to engage with the appropriate resolution process. The outcome of the case was her application was dismissed, and what the Commissioner did throughout this period stood. Now, this should serve as a warning to anybody that is in business that should Inland Revenue investigate, audit or issue a NOPA against you, you need to take it very seriously and respond straight away. If you fail to respond and you do so outside the normal statutory periods, then you're going to have to live with what the Commissioner of Inland Revenue did. I can tell you that at Dodd & Associates here, we've only ever had one instance of a NOPA being issued against a client, and in that case we were able to argue successfully against what the Commissioner did, and the original work that we done stood. We did know at the time that it was a very tough process to go through, but if you stick to it and you respond within the appropriate deadlines, you can end up with the desired result, which we did find. So just remember, if and when you do something, please make sure you stick to the appropriate timelines, respond in good faith, and also be friendly. They're not there to attack you, they're there to protect the tax base, and you should try and stick to what the rules are. Well, that's it for today. I'll say goodbye and we'll catch you later.